Hi everybody, Julie Sheremeto here with your mortgage design team alongside Barb and Carol, your trusted real estate partners. I wanted to update everybody as to what's happening in the world of interest rates and mortgages. We are seeing that the Bank of Canada is struggling with their decisions. They meet 8 times a year to decide what their overnight rate is going to be so that the banks can set their prime rate, and then the variable rates for mortgages follow from those bank prime rates, the lender prime rates. They are really watching inflation right now because we've seen with the war in Iran, the price of oil going up so much that is really a contributory factor to inflation, which makes them want to raise rates. But on the other hand, we have employment numbers and the other struggles that the economy is having in terms of whether or not we are in or headed into a recession, which would then have them bring rates down. So they are really struggling with those two things right now. And that so far has meant no change to the variable rates. That's nice for variable rate mortgage holders, especially because with the oil prices and the uncertainty, we have seen that the bond yields have gone up, and fixed rate pricing is tied to bond yields. So with the bond yields increasing, that means that fixed rates have gone up, and they're actually quite a bit higher than they were even a couple of weeks ago. We saw a 0.3 to 0.5% jump virtually overnight. So most fixed rate mortgages are sitting in the mid to high 4% range. My apologies. They're not, most of them aren't quite 5 yet. Variable rates, we're still getting the high 3s and low 4s. So variable rates are staying actually quite a bit lower than fixed, and that's been a bit of an appeal for some people who are leaning towards a variable. If you are in a variable rate mortgage right now, locking into a fixed may not make sense for you unless you're losing sleep at night over potential changes to that prime rate, which could increase over time with the Bank of Canada announcements, and your interest rate could increase on your variable. If you're not in that position, right now, most people are holding on their variable rate mortgage and not locking into anything. A new mortgage, same thing. More and more people are taking variable just because the rates are starting a fair amount lower than the fixed. So those initial savings can be very worthwhile. With the outlook for what we're planning on, we don't expect to see any big movements on either the fixed or the variable, but there will likely continue to be some continued fallout, and some of those changes are likely coming down the pipeline. It hasn't eroded affordability at this point, especially because we do have those variable rate options. But if you would like to know what some possible numbers look like for a budget on your home, if you're looking to see whether or not you can tolerate the changes to a variable from a budget perspective, or you just want to run through different possible outcomes, that's what I'm here for. The real estate market is waiting for you, the buyers, to get out there, and the inventory is likely going to continue to increase, which means there should be options, but the buyers, it's waiting for you. So if you're out there and you're sitting on the fence, talk to Barb and Carol, and let's get you into a home. Take care.